Hello traders, the title of this video is Wave Trading Part 2. If you have not watched Wave Trading Part 1, you may do so before watching this second part. Very important, so you may understand what we were talking about. To summarize what we were discussing in the Wave Trading Part 1, we were saying that the first wave must break a resistance on our left-hand side. Consolidation, breakout. Very, very important, all right? Okay, so now when we count 5 waves, what traders are doing after they count 5 waves? They will be expecting, they will highlight the 50% level and the 61% level, okay, of the motive wave. We also learned in the first part that the motive wave is the 5 impulsive wave. I mean the 5 wave. First wave, second wave, third wave, fourth wave, and fifth wave. That's the motive wave. We also learned that the Elliott wave cycle is composed of the motive wave, 5 wave, and a corrective phase. I was starting to discuss the corrective phase where I was telling you that sometime during the corrective phase we may have what we call a flat correction that can bring the price above the motive wave. Let's continue with this series of videos talking about the wave trading education part 2. In this video, I'll continue with the discussion of the flat correction. The flat correction is a correction that can bring the price back above the motive wave, above it, completely above it. Now, something else, because I have some traders that are very, very serious about Elliott wave trading. I need to mention this to these traders now. The next thing that professionals are doing, after they count 5 waves like this, so they highlight the 50% and 61.8%, they will be looking for opportunity that the price may change direction here. As you can see, there's this green candle here on the yearly chart. You can see that aggressive traders start buying, but the price did not turn around here, but instead went down to the 78% Fibonacci retracement level. So do not assume that the price will definitely change around between the 50% 61.8 zone. If the fundamentals are not solid, the price will not start a new cycle. Also, you have to pay attention to the market itself. Let's continue with this discussion because I don't want to talk too long. What I was saying to traders. All right, let's remove some lines. So follow me carefully, and because I receive a lot of email for traders that were asking questions about the Elliott wave. I do not count wave for traders, but my priority is to guide traders to understand, okay, the wave principle. And that's what we are doing again here. So we counted 5 waves, so we also highlighted 50% and 61.8%. Now, professional, they will use what we call the Fibonacci extension. So first, they use a Fibonacci retracement level to highlight the 50% and 61.8 level, which is right here. Let me put a spotlight there for you to make it a bit gorgeous. All right, you want it to make it interesting. And the next thing they do, they use the Fibonacci extension from the starting point. So they will draw it inverse now from the end of the motive wave to down to the starting point of the motive wave to highlight key levels, this extension level. The level that they are watching is this one here. 138% Fibonacci extension level. Now, if you, let me say this to you slowly, if you understand what I'm going to say to you now, you can consider yourself, okay, somebody who has learned something special today, all right? So, let me say this to you again. After professional count 5 waves, they will highlight the 50% and the 38% Fibonacci retracement level at 50% and 61.8% retracement level. The next thing that they will do, they will use Fibonacci extension. So first they use Fibonacci retracement, and then they will use Fibonacci extension for the motive wave. All right? And they will highlight this level here, 138%. Why 138% is so important? Think of it. From the starting point of the motive wave to the end of the motive wave, that's what we call 100%. So the bullish cycle, because we are in a bullish cycle here, all right? The motive wave is 100%, all right? So usually the price can pull back, as you can see here. In this case, when we were using the Fibonacci retracement, now I'm using Fibonacci extension, so you can see the levels. The price pulled down to the zone of 78%. You remember? So 78%. Call it, okay, call it 70%, all right? Call it 70%. I will explain that to you in another video, okay? Call it 70%. So from here to here, that's what we call it 70%, all right? So we will say there is a discount, the price discounted itself to 70%. So it's like Christmas time, 70% discount was given to, okay, investors. The stock that went all the way up to this level, $50, now is now almost $10. So it's almost 70%. Call it 70%, okay? As because the price pulled back 70%, these traders that were buying here, do not forget this, they know that this is a 100% move. Now the price went down 70% move. What they are thinking is that in order to have the same 100%, the price must go above the 100% level, which means 130%. So 70%, and we put on top here 30% to make it 100%, which means the distance from A to B. Okay, in theory, these bullish investors are expecting another move again from C to D, okay, which will bring the price into the zone of, 138% zone. The idea behind is that price went down 70%. When it come back to the starting point here, that 70% move, you remember? So from here to here, 70%. So from here, again to the same level, that's exactly again 70%. So when we reach this level, we'll say again, we have achieved again 70% of this move. Because we want 100%, we add 30% to it, bringing us near the 138% level. To summarize, ladies and gentlemen, professional, after the motive wave and the corrective wave is underway, they will highlight the 50% and the 61% level, expecting the price to start a new cycle at that point. It doesn't always happen because sometimes we may have what we call a flat correction, a running flat correction, an expanded flat correction, okay, a classic flat correction. Check our webpage about this flat correction. Next, professional will use a Fibonacci extension highlighting a level of 138%. I have already explained to you why that level is so important for investors. I invite you now to follow me in the third part of this video, talking about wave trading part 3, okay, where we will continue to discuss again, okay, more about wave trading education. See you in the next video. Thank you for watching, and we will speak to you very soon. We are the TSTWS008 traders.